Why is the job market on the brink of collapse? Think about this. Just when the economy looks strongest, stock markets smashing records, corporate profits soaring, over 1 million Americans are being laid off in 2025. It feels like a paradox. How can the economy be booming and yet workers are losing their grip on stability? That tension is the heart of today's video. And if you've been wondering what's really happening behind the headlines, you're not alone. Let's start by painting the big picture. In 2025, U.S. employers have announced more than 1.09 million job cuts. October alone saw 153,074 roles eliminated, the worst October for layoffs in over 20 years. What's fueling this purge? Two main culprits: cost-cutting and artificial intelligence. It's not just tech. Warehousing is also getting hit hard as automation accelerates. And yet, at the same time, companies are reporting record profits, and stock markets aren't showing much fear. You have this strange disconnect. Corporate balance sheets are healthy, but for workers, things are getting shaky. This isn't just a correction. Many economists are calling it a jobless boom, an economy growing, but opportunities shrinking. So how did we get here? What forces are reshaping the labor market so aggressively? In Part 1, we'll break down the key trends causing this upheaval. By the end, you'll see why this isn't just about a dip in hiring. It might be a deeper shift in what work even means. First, let's talk layoffs. The scale is sobering. According to Challenger, Gray & Christmas, a firm that tracks layoff announcements, job cuts in 2025 are already well over 1 million. October's 153,074 cuts weren't just a blip, they're a signal. These numbers are historic. Business Standard notes, it's the biggest October since 2003. Where are these cuts happening? Tech is on the front lines, but it's broader than that. Logistics, warehousing, retail, many sectors are pruning staff. Companies like Amazon are cutting 14,000 corporate roles, citing AI as a key reason. UPS is slashing tens of thousands too, closing warehouses and leaning into automation. Second, let's dig into why this is happening now. Why is AI such a big deal in labor markets today? Artificial intelligence isn't a distant threat. It's already disrupting. According to layoff trackers, 31,039 jobs in October alone were explicitly tied to AI, making it the second most cited reason for cuts after general cost reduction. Over the year, about 48,414 jobs have been linked to AI-related restructuring. Think about it like this. AI is not just helping companies grow, it's making it possible to do more with fewer people. Tasks once done by entry-level employees or mid-level managers are now being automated or streamlined. Work that was routine, data entry, reporting, logistics coordination, is especially vulnerable, and this isn't just speculation. Companies are openly acknowledging it. Amazon's CEO has described this as a generational shift, on par with the internet revolution. Third, even as jobs are being cut, hiring plans have slowed dramatically. According to Challenger, planned hires in 2025 are the lowest since 2011. That's not just a slowdown, it's a red flag. At the same time, hiring freezes and belt-tightening are becoming widespread. The labor market is cooling from the inside out. Layoffs are surging while new job creation is weakening. That's a dangerous combination. Fourth, entry-level roles, often the first rung on the career ladder, are under threat. Even before the AI wave, many of these roles demanded experience that new entrants didn't have. Now, with automation, even those few roles are at risk. Imagine trying to land your first work experience, but companies don't need as many hands anymore, or want more specialized, tech-savvy ones. It's a blocker. This feeds a structure that's increasingly polarized. A few high-paying, specialized jobs on top, and fewer safe, accessible ones at the bottom. Some researchers describe it as a diamond-shaped labor market, wide at the top and bottom, but narrowing in the middle. More on this later. Fifth, while many jobs are disappearing, new ones are emerging. AI is creating demand for very specific skills: data scientists, prompt engineers, AI ethicists, digital strategists. But these aren't jobs for everyone. The new roles often require specialized training, advanced education, or relevant experience. Not everyone laid off can immediately transition into these roles. That's where reskilling comes in. For a lot of displaced workers, success depends on learning how to work with AI, not just being replaced by it. But that shift isn't simple. It demands access to training, incentives to learn, and time, things that not every worker has. Finally, in this section, there's a troubling contrast. Corporate profits are high, yet worker stability is weakening. Why? Because companies are not just cutting costs, they're restructuring work entirely. They're aligning operations with a future where fewer people do more, powered by machines and algorithms. It's not just a shakeout, it's a transformation. So far, I've laid out the problem: massive layoffs, AI-driven restructuring, weak hiring, and a fractured labor market. These are not isolated trends, they're interlinked. And together, they're driving us toward a labor landscape that looks very different from what many of us grew up expecting. We saw how layoffs, AI, and automation are reshaping the job market. Now let's dig deeper into the real impact on workers and why climbing the career ladder is getting trickier. First, tech isn't just cutting jobs, it's changing what work even means. Take software engineers, for example. Roles that used to involve writing large portions of code from scratch are now assisted, or sometimes replaced, by AI tools. A report from eWeek shows that companies are increasingly relying on AI for tasks that were once entry-level programming work. This means that even mid-career professionals need to adapt or risk being left behind. Then there's the entry-level crisis. Traditionally, new graduates or first-time workers would gain experience by starting at the bottom and learning on the job. But now, many junior positions require prior experience, often in tools or technologies that students haven't even been taught yet. Imagine being told you need 2 years of experience to get a first job. That's a barrier to entry for millions. According to Forbes, hiring managers are expecting more technical skills at the start than ever before. Next, let's talk about AI's dual role. While AI is eliminating jobs, it's also creating opportunities. Roles like AI prompt engineers, data analysts, AI ethics officers, and machine learning specialists are in high demand. But here's the catch: these roles require specialized skills. Not everyone can pivot quickly. Workers without access to reskilling programs face a stark choice: adapt or risk prolonged unemployment. And it's not just tech. Logistics, retail, and even service industries are seeing automation take over routine tasks. Think about warehouses. Robots now sort, package, and move inventory. UPS, Amazon, and Walmart have all reported reductions in human staff as machines take over repetitive roles. So what does this mean for the average worker? 1. Job security is eroding. Even well-paying, seemingly stable roles are vulnerable to automation. 2. Skill gaps are widening. The skills required to stay employable are changing faster than many can learn. 3. Career paths are narrowing. Entry-level access is shrinking, while specialized roles dominate the upper tiers. This brings us to the diamond-shaped labor market I mentioned in Part 1. Imagine a diamond, wide at the top, wide at the bottom, but narrow in the middle. The top represents highly skilled, specialized workers earning premium wages. The bottom represents low-skill service roles that are harder to automate. The middle, mid-level jobs that once allowed workers to climb the ladder, is shrinking. The ladder itself is disappearing. Now consider the psychological and societal impact. Young people entering the workforce face discouraging odds. Mid-career workers may struggle to reskill. Even seasoned professionals are adapting to roles that didn't exist a decade ago. The stress, uncertainty, and competition are unprecedented. But let's not ignore the silver lining. AI and automation, while disruptive, also open doors for those who adapt quickly. Companies are looking for employees who can work alongside AI, those who understand the technology, can analyze data, and make strategic decisions that machines alone cannot handle. Reskilling, upskilling, and flexibility are no longer optional. They're survival tools. Education and government programs will play a key role. Some states and private institutions are offering accelerated tech training, focusing on AI, cybersecurity, and digital skills. Workers who embrace lifelong learning have a clear advantage, but access to these programs isn't universal, creating a new divide between those who can pivot and those who cannot. Finally, let's address the economic paradox: record corporate profits versus rising unemployment. It's a reminder that wealth creation doesn't guarantee worker stability. Companies optimize for efficiency, shareholders, and automation-driven growth. But without a workforce that can access opportunities, the broader economy risks stagnation. Consumer spending could slow, inequality could rise, and social tensions may grow. So far, we've covered the layoffs, AI disruption, and the shrinking middle of the job market. Now let's talk about the future of work, how to adapt, and what this jobless boom really means for everyday Americans. First, let's face reality. The job market is not going back to the old normal. Automation isn't a passing trend. AI is here to stay, and companies are rethinking how they structure work. The diamond-shaped labor market we discussed is likely to become even more pronounced. Highly skilled workers at the top will see opportunities multiply. Low-skill service roles may persist, but middle-tier roles, the ones that once allowed workers to climb the career ladder, will remain under pressure. This is why reskilling and adaptability are non-negotiable. If you're a worker today, you have to ask yourself, which skills will still matter in 5 years? Which roles are AI-resistant? Roles requiring creativity, problem-solving, emotional intelligence, and strategic thinking are far less likely to be automated. Understanding technology, even if you're not coding yourself, will be crucial. For those entering the workforce, the story is tougher. Entry-level positions are disappearing or now demand prior experience. The old path of start low, climb high is harder to navigate. But there are alternatives: apprenticeships, short-term specialized training, and online certifications can bridge the gap. It's about demonstrating skill and value, even without traditional experience. Let's not forget the employer perspective. Companies are not evil. They are optimizing. AI and automation reduce costs, increase efficiency, and can even create new revenue streams. But that optimization comes with a human cost. For the economy to remain stable, we need policy interventions, corporate responsibility, and accessible retraining programs. Otherwise, rising inequality could suppress consumer demand and eventually hurt profits too. Now, a paradox emerges. Despite record profits and a booming stock market, the majority of workers feel insecure and sidelined. This is the essence of a jobless boom. The economy grows, but fewer people benefit. It's a stark reminder that growth on paper does not equal prosperity for everyone. So, what can workers do? 1. Invest in skills that machines can't easily replicate. Creativity, critical thinking, negotiation, and leadership are safe bets. 2. Embrace lifelong learning. Online courses, boot camps, and certifications are essential tools. 3. Be flexible. Job titles and industries are shifting. Don't be afraid to pivot to where demand is rising. 4. Leverage AI as a tool, not a threat. Understanding AI will make you indispensable rather than replaceable. And what can society do? Policymakers must support reskilling programs, incentivize companies to invest in their workforce, and create safety nets for those displaced by technology. Without these measures, the gap between economic growth and worker stability will widen. In conclusion, the U.S. job market is on the brink of transformation. Some would call it collapse, but others call it evolution. The rules of work are changing. The old ladders are gone. But for those who adapt, learn, and embrace technology, new opportunities will emerge. It's a survival of the adaptable scenario. Your skills, mindset, and flexibility are your strongest assets. If you found this video insightful, hit like comment your thoughts, and share your own experience navigating this changing job market. Don't forget to subscribe and watch more videos to stay ahead of economic trends that will affect your future. The future of work is coming, and now it's time to prepare.